Guys, our topic today is market structure, then combining market structure with support and resistance and candlestick patterns. Maria will be taking us through that. So I hope you have your pens, and if you have a question, you can always raise your hand, or you can write on the chat box, and then I'll be here to moderate. So guys, thank you. Let's go on. Karibu sana Cosmas. Maria, the floor is yours.
Thank you so much, Eric. I would say good evening to everyone. Whoever is on the call, you're so very much welcome. Today, we're going to be talking about market structure. And so if you have your phone close by, you might want to put it on silent. Get away any distractions, because market structure is one of the topics that make the basis for technical analysis. So it's very important to get it right. As you're analyzing the charts, market structure is the most important part of it. And also, if you really want to become a professional trader, I would advise that you get yourself a laptop or a desktop, because it gives you a much a wider view for you to be able to mark any zones on your chart, for you to better analyze the chart, much better than using a phone, because a phone has a really smaller view. You can't see so much, even if you zoom in. And so you're welcome for today. Let's start. Let me just share my screen, and then we see what exactly we are going to look at. However, the 1 hour or 1.5 hours that we have here is not going to be really sufficient for us to complete this topic, but we are going to really touch on the main points of market structure. So let me just share my screen shortly. Is everybody able to see? If you're able to see my screen, just type a Y to mean yes in the chat, so I can. And if you're able to hear me still, kindly type yes in the chat so I can know that we are on the same page. Oh, great. That's about 6 people in the chat. Thank you. Thank you, Godfrey, Martin, Alex. Thank you, guys. Okay, now I know there are people hearing me out. Thank you, Isaac Martins. Okay, so this is what exactly we're going to cover today. Under market structure, we're going to look at the trend. And next, we shall look at support and resistance. And under support and resistance, we shall look at things like trend lines, sorry, structures like trend lines, channels. And also, the third thing we should look at today is how to integrate or combine market structure with support and resistance with the Japanese candlesticks. We have already, we had Japanese candlesticks earlier on, so we are going to integrate market structure with Japanese candlesticks, and how a trader can use these to make a good trading decision. So what exactly is market structure? Market structure basically refers to how the market is structured, or basically how price is moving. So when you look at a price chart, price can either be trending or ranging. And when we are talking about trending, it can either be trending upwards or downwards. Or if it's ranging, the other word you can use for ranging is consolidating or a sideways market. So those are the three phases that a market can be in. It can either be trending upwards or trending downwards or ranging. So why is it important to study market structure? Because it helps us to better understand how chart patterns are formed. So as price moves, price creates market highs and market lows. Please note, that the market does not move in a straight line. Markets, if it's an uptrend, market goes up and then pulls back a bit. It continues and pulls back a bit. And I'm going to show you on a whiteboard, just a simple illustration, how market normally forms these trends. So before a trader enters the market or decides whether to sell or buy any currency pair, the first thing the trader needs to do is to first study how the market is structured and classify it. You will want to ask yourself, you as a trader, questions like, is this market trending or is it ranging? So you don't just bump into the market and decide to just sell or buy. That would clearly be gambling. So you first of all have to study and see how the market is structured. And then if it is trending, which direction is the market trending in? Is it trending upwards or is it trending downwards? So let's first look at trending upwards. So like I said, price can either be trending upwards or downwards. So if it's trending upwards, we refer to that as a bullish trend. You're going to hear words like bulls and bears. For those that are already trading, I'm sure you already know this lingo. But those that are new to trading, when you hear words like bulls or a bullish trend, it means that the bulls are in control. And bulls means buyers. So when you hear bears or bearish trend, that means that is a downward trend. And it means that the bears are in control. Bears to mean the sellers. So the bulls are the buyers and the bears are the sellers. So a bullish trend comprises higher highs and higher lows. So as market is moving, market creates a new high that is higher than the previous high and a new low that is higher than the previous low. And so let me just show you a simple illustration how a bullish trend can look like. So I hope everybody is able to see this whiteboard. So when we talk of a bullish trend, we are talking of higher highs and higher lows. And this is how it looks like. Market will create a high and then pull back and create a low. And so market is going to push higher and create a new high that is higher than the previous high. And then it's going to pull back and create a new low that is higher than the previous low. Please note we are only having high, 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 high because market is continuing high. So market continues and creates a new high that is higher than the previous high. And then it pulls back and creates a new low still higher than the previous low. So it continues high and creates a higher high and pulls back and creates a new low and it continues up. So we don't know where the trend will end until we see what we refer to as reversal signals, meaning an indication in the market that this trend has now been exhausted and the market is now ready to reverse, to now come down. So this is what I mean by higher highs and higher lows. This is our first high right here, and this is a low. So market pushes higher and creates a higher high. This is H and H. Forgive my handwriting. And it pulls back and creates a higher low. So you realize that this higher high is higher than this previous high. So when it pulls back, it creates a higher low, a low that is still higher than the previous low. So market pushes higher because this is an uptrend. It's a bullish trend. So market just keeps going on higher and higher. So market moves higher and creates higher high. And it's going to pull back a bit and create a higher low. So market continues up and creates a higher high and pulls back a bit and creates a higher low. And it continues up. And so what you see in an uptrend is a series of higher highs and higher lows. And I hope that's clear for now. So when we talk about a downtrend, now this is an uptrend. When we talk about a downtrend, it's going to be like this. So market creates a low, pulls back and creates a high. So since it's an uptrend, it means that, since it's a downtrend or a bearish trend, it means that market is going to keep pushing lower. So we're going to see a series of lower highs and lower lows. So market continues lower and creates a low that is even lower than the previous low. So it pulls back and creates a high lower than the previous high. So it pushes down further and creates a low lower than the previous one and pulls back a bit and creates a high that is lower than the previous high. So it pushes further down and creates a new low, pulls back a bit and continues. We still don't know where the market, where this particular trend, where this downtrend is going to end until the market prints reversal candlestick patterns to indicate that the downtrend has ended and that the buyers now have gained strength in the market to push the market higher. So if this is the first low, market pushed and created a low here, and it pulled back and created a high. So since it's a bearish trend, it means it keeps pushing lower and lower. So it pushes lower and creates a lower low. So here you're having a series of lower highs and lower lows. So it pulls back a bit and creates a lower high. So it pushes even lower and creates a new lower low, and it pulls back a bit and creates a new lower high. So market is going to continue and create lower low and pull back a bit and create a lower high. So for a bearish trend, you're going to have a series of lower highs and lower lows. So this right here is an uptrend. This down here, this on the right side is a downtrend. Guys, are we together up to this point? Feel free to type in the chat that yes, so I can know that there are people on the other side that are following with me. Okay, thank you, Moses and Millie. I believe the rest are also following, but probably their hands are full. So this is it for an uptrend and a downtrend. Remember, an uptrend is a series of higher highs and higher lows, and a downtrend is a series of lower highs and lower lows. So we say the market can either be trending upwards or downwards or ranging or consolidating. So let me just wrap this so I can illustrate a ranging market or a consolidating market. So when market is ranging, it means that the market is just moving sideways and is basically bouncing between two zones. So it's not breaking out to the upside. It's not either trending upwards or trending downwards. It's just bouncing between two zones. It's bouncing between a high price and a lower price. So let's say this is our high price and this is our lower price. So market is basically just bouncing within these zones. Goes up, rejects or bounces off, comes down, bounces off, goes up, bounces off, comes down, bounces off, goes up, bounces off, and comes down. So the upper price here is what we refer to as resistance. And then our lower price here is what we refer to as support. And so when the market is consolidating or ranging, the market is just bouncing between resistance and support. It is not breaking out to the downside, and that is why we are calling this resistance. Look at, that is why we are calling the lower price support. Look at support as the floor. You see, if a ball bounces on the floor, it's not going to go into the ground. It bounces off the floor. So this is the same thing happening here. So price comes and bounces off. Price comes and bounces off. So you will place your support here. So you realize that price is not breaking any further downwards. So when you look at resistance as the ceiling. Price is just reaches the ceiling and then bounces off because there is just no room for it. Basically, the resistance or the ceiling is preventing it from further continuing to the upside. And so price comes to the resistance and it just bounces off, or it rejects this resistance zone and comes down. So price gets back up here to the resistance zone and still bounces off and comes down. Price gets back to the resistance zone and still bounces off. So you realize in this case, market is moving sideways and is just, bouncing or moving between two zones, between a high price and a low price. So when you see such kind of movement, it means that the market is ranging, or it's consolidating, or it's a sideways market. So that's basically the ranging. So remember, price can either be trending or ranging, can either be trending upwards or downwards or ranging. So when you as a trader get to your chart, the first thing you want to do is look out for how the chart is structured or how price is moving. Is price trending upwards, or is it trending downwards, or is price ranging? So we have looked at a bullish trend. We have also looked at a bearish trend. And we have also looked at consolidating market, or ranging market, or a sideways market. So let's just break down support and resistance a little bit more. So like I explained, support is like the floor. It's a zone on the price chart that is below the current price, where price has failed to break even lower. So it's not a fixed price, it's a zone. And I'm going to show you how we normally mark our support and resistance on the price chart. We do not mark it as just a single price, but we mark it as a zone. So you as a trader, using your hand and using your eyes, you look on your chart and realize that, oh, there's a particular zone at which price is getting to, but price is failing to break below. So using your hand, you will draw, or you will mark the support zone on your chart. They are not automatically marked for you. And that is why we call this analysis, because you analyze the chart yourself and you draw these zones yourself. So it can either be a horizontal line, like I have showed you when you're looking at a ranging market. It can either be a horizontal line, or it can be a diagonal line, as we are going to look at it on the price chart shortly. So if it's a diagonal line, then we shall refer to it as a trend line. So normally, as price approaches the support area, we expect price to bounce off, and therefore it will provide an excellent entry level for a buy position. Now, there are two golden rules when you're looking at support and resistance. First, when you are looking at support, the support zone, we look to buy. We do not sell into a support zone. At the support zone, we look to buy, and that is one way of minimizing losses. If price is at support, you wait for signals that that will lead you, that will guide you into a buy. You basically look out for buy signals. 2, at the resistance zone, we sell. We look out for sell signals, but we do not buy into resistance. And so resistance is a zone on the price chart that is above the current price. Still, I illustrated this when we were looking at the ranging market. So it's above the current price where price has failed to break above. Just like support, it is also a zone. It's not a fixed price. So it's also hand-drawn by the trader on the chart. You use your bare eyes, look at your chart, and I know in the beginning, it may not look as simple, especially for newbies or for beginners, sorry. But as you spend time analyzing the charts, as you spend time on your charts, these zones start becoming very familiar to the eye. And so with time, when you get to the charts, it's a bit easier for you as a trader to locate these zones. So you draw it on the chart using your hands. It can be a horizontal line or a diagonal line. And if it's a diagonal line, we refer to it as a trend line. So as price approaches the resistance area, we expect price to bounce off and therefore provide an excellent entry level for a sell position. So like I said earlier, at resistance, we look for sell signals to sell. We don't buy into resistance. At support, we look for buy signals to buy. We do not sell into support. So are we together at this point? And if anybody feels like they're lagging behind or you have a question, please feel free to raise your hand or to type it in the chat. So right now, I'm just going to share a price chart, and then we try to look out for, and then I show you how an uptrend is and also how a downtrend is. Are there any questions up to this point?
Guys, feel free to unmute yourself and ask a question if you have any. Thank you.
Sorry, Maria, this is Stephen. I'm just coming in late, but I think one of the issues that I've heard has to do with when you do the 4-hour time frame and then come down to the 1 hour. I think that's been a challenge of when do I get in, and you know, which is the best time. I think Erica talked about you need to wait for confirmation before you decide when to get in. I don't know whether you have already touched on that. I've tried to have the trend line and also the horizontal line, and a number of times it has worked properly. Sometimes it hasn't, but anyway, I guess you have already touched on that. Sorry, I came in late. I'm not sure what you have covered. That's okay.
If I got you right, you mean the multiple time frame analysis is still kind of confusing you on how to enter the market to trade, right?
Right.
Okay, so we shall get to that, especially when we're looking at when we are trying to combine market structure and support and resistance, I guess at a later point. But right now, we are still looking at market structure. We are still trying to understand an uptrend, a downtrend, and also ranging markets. So I'm sharing my charts to show you how these kind of trends look exactly on the price chart. So like this is a price chart of euro against the US dollar, euro USD. Sometimes for traders, we normally just say EU. So when you hear things like EU, just know that's an abbreviation of euro USD. So this is the daily chart. Okay. And so when I look at this chart, remember we said when it's a bearish trend or a downtrend, we shall see a series of lower highs and lower lows. So let's just select this here and analyze this portion of this price chart. When I look here, I see that price came down here and created a low right here. And price pulled back and created a high here. So I remember in the previous classes, somebody asked, how can I read the trend? How am I able to analyze the trend without using any indicators on my chart? And I answered by saying, just use lower highs and lower lows for a bearish trend. And this is exactly what I'm trying to illustrate here. And so price pushes, since it's a bearish trend, price is just continuing. The longer moves are to the downside. Then the shorter moves are basically a pullback or a retracement. And so these shorter moves here are what we call the pullback or the retracement. And so price continues. So the longer moves, we normally refer to them as the impulse moves. So the longer moves in the direction of the trend are the impulse moves. So these shorter moves are simply pullbacks or retracements. So price continues down, creates a lower low and pulls back and continues down. And like I said, you can't know where the trend is going to end until you see reversal patterns on the chart indicating that probably price is going to reverse to the upside. And so this is our first low right here. So price pulls back and creates a high right here. Price continues down and creates a lower low right here. Price pulls back and creates a lower high right here. So price continues even lower and creates a new lower high there. Price pulls back and creates a lower low is right here. And so it pulls back and creates a lower high here. Price continues down and creates a lower low here and pulls back and creates a lower high. So it pushes even lower and creates a lower low. So we are assuming that this is a lower high right here. And so here you clearly see that price is in a bearish trend because it's creating a series of lower lows and lower highs, lower lows and lower highs. Okay, and so let me just give it to you right here. So when you are trading a bearish trade, when you look at your price chart and you're able to analyze it and realize that price is trending downwards, you want to look for sell opportunities. Remember, we say the trend is your friend. So it helps to the trader to trade with the trend. So in this case, you'll be looking for sell opportunities, but you just don't sell from anywhere. Remember, as you're selling, you are anticipating that price is going to push even lower and create lower lows. So you're selling, anticipating that price is going to continue to the lower side so that you're able to make a profit. So you want to sell at the best possible price. So when we are selling, like when we are looking for sell opportunities in a downtrend, we want to sell at these pullbacks. This is where our sell opportunities this is where we shall find our sell opportunities, at the pullbacks. We are not going to sell at the lower low. You want to wait for market to pull back and then you sell. So market goes and creates a lower low. So you want to wait for a pullback, then you're able to sell, okay? So that is the catch. When market is trending downwards, we want to sell at the pullbacks. So this is for a downtrend. And let's just look at a bullish trend and also mark it out the same way we have marked this one out.
Martin has a question. How are you using the tool to draw the lines?
Okay. So MT4 has quite a number of tools. This is called an ellipse, and I will show you where you can get it. This is it, but the rectangle and the ellipse, I'm sure you don't have them by default on your trading platform. So at the end here, at the end of the toolbar, there are a series of lines, sort of like a menu. So right click on it and then select customize. Once you select customize, you will see a number of tools in here. So, okay, let me remove mine so I can put them back. Okay. Remove. Okay, so you will come here, right click and then click on customize and then scroll down, select if you want a triangle. The triangle is what we normally use to draw our zones, to mark the zones on the charts as well. If you're marking support and resistance, we normally use the triangle. So click on it.
The rectangle.
Oh, I say triangle, sorry. So select rectangle and click on insert. And then what I'm using for the lines is the ellipse. Click on it and then you say insert and then you say close. So when you look at my toolbar here, is an ellipse here and a rectangle here. The ellipse, you can use it a number of ways. So you just click on it, then bring it on the chart and left click. Long left click and you can move it. You can draw it that way. So if you need to delete it, just double click on it and then these small squares will come on, right click and you can delete it. Still, if you need to adjust it, just double click on it. These small squares will come and then you can adjust it to your preference. So same as the rectangle, you just click on it and when you bring it to the chart, you long left click. And then you can use it to draw a zone or to draw a small, basically to mark anything on your chart that will help you as you're doing your analysis. So if you want to adjust it, double click on it. The small squares will come on and then you can adjust it to your liking. Make it longer, make it smaller. Yeah. So that's it. Any other questions as up to this point? Allow me to take a sip of water as I wait for any questions, if any. Okay, I assume we are all still on the same page. And so that's it for the downtrend or the bearish trend. I mean as lines with corners. Martin Alex, please unmute yourself and just ask. I may not be understanding your question when you type it in the chat. Please unmute. Feel free to unmute.
Okay, thank you, Maria. I'm looking at you the way you are dragging and drawing the lines. It is continuous. Yeah.
Mm.
But for me, when I draw it, break, I have to go and again pick the tool to
That's
add
exactly
another
what
line.
I did. That's exactly what I did. I just kept on picking it. I just kept on picking it. You see what I'm doing right now? I'm just combining them. And I just wanted to really illustrate the...
I see you pick it once.
No, I'm picking it every time I want to draw it.
Okay, okay.
Yes, I'm picking it every time I want to draw it. It's not continuous. However, in our
Okay,
subsequent meetings or classes and also at the paid, in the accelerated course, there's so many of these small nitty-gritties that we tackle that we may not really tackle here.
Hello.
Yes, please.
Good evening, madam. Thank you for the
Good evening.
presentation.
You're welcome. Very welcome.
I've just learned some few minutes ago, but I would like to, because me personally, I'm more interested in support and resistance. As I want to be trading that. So I can request
Richard,
you.
your background is very noisy.
Yeah.
Richard, your background is very noisy. We can't hear you
All right.
clearly.
Hope you're getting me clearly right now.
Yes, you're now clear. You're now clear.
Okay. My question is, I want to be trading support and resistance and would like you to guide me on what to do necessary. Thank you.
You want to be trading support and resistance. So whatever you want to trade will really depend on your trading style. However you want to trade will depend on your trading style. So I am going to show you how you draw your support on the charts shortly after. And then if that's the only trading style you want to have, that will be a decision really made by you. But for now, let me first continue. We have looked at the bearish trend. And so let's look out for the bullish trend. So I'm trying to look for a good and clear uptrend.
You can look at GJ. GJ has had a good run
Okay.
for the whole year. GJ, you'll find a good uptrend. Maybe if you go to a smaller time frame, you can clearly see 1 hour. Look at 1 hour. Does that work? Or USD or USD JPY?
Okay, let me check that. Okay. So let's look at this. This is USD JPY. Realize the price comes up here, and remember we said for an uptrend or a bullish trend, we should be able to see a series of higher highs and higher lows. So price goes up, creates a high, and the price comes down, creates a low. So price pushes higher and creates a high, which is higher than the previous high. The price pulls back and creates a low, which is higher than the previous low. So here we just have basically highs, higher highs and higher lows. So price pushes further and creates a high right there, higher than the previous low, and pulls back and creates a low right there, higher than the previous low. So, and then price continues on and on to create a new high. So this is what we are referring to as higher highs, higher lows, a high and a low. Higher high and a higher low. Higher high and a higher low. So when you are trading an uptrend, you're anticipating that I'm entering this trend. I'm looking for buy signals, and they should be able to buy this currency pair, anticipating that price is going to continue higher for me to make a profit. So since you want to make a profit, you want to buy at a discount or at the best possible price. And that is why when you're buying, we look at these pullbacks or the retracements. So when price moves and creates a higher high, price pulls back and creates a higher low. So at the higher lows is where we want to look for buy signals from. We don't want to buy at a higher high. We want price to pull back and we get the best possible price. So we buy at the pullbacks. We buy or at the retracement. So it can either be called a pullback or a retracement or a correction. So that is where we look for buy signals from. Okay, so whether it's an uptrend or a downtrend, you want to place, if it's an uptrend, you want to place your buy trade at the pullback. If it's and which means that is at the higher low, because that's where the pullback happens. And if it's a downtrend, you want to place your sales at the lower highs. And so this is how your uptrend would look, or your bullish trend would look on the chart. And if you want to buy, you want to buy at the pullbacks. And so we talked of support and resistance. And support and resistance either being a horizontal line or a diagonal line. And if it's a diagonal line, we shall refer to it as a trend line. So going back to my earlier example, this was Euro USD. Remember, we said when you're drawing support and resistance on your chart, it's you, the trader, that uses your eyes. You look on your chart and you realize there's a particular zone. Let's say it's for resistance. You realize there's a particular zone where price has failed to break above. And we said it can either be horizontal or diagonal. So in this case, let's draw a trend line or a diagonal resistance. So you realize as price comes down, it pulls back to the lower high, continues down, it still pulls back. So there's a zone right here and right here where price couldn't break above. And this is where you say, okay, let me pull my trend line. Let me do that again. So when you look at your toolbar here, there's a vertical line here. And when you place your cursor there, it clearly indicates vertical line. There's a horizontal line. There's a trend line. A trend line is a diagonal line. So you click on it and then you bring it to the chart and you left click, left long click. So you draw it. And you realize when you draw a trend line and it's touching the lower highs, then that's a valid trend line. You need to place it properly, you double click on it, and then you're able to adjust it. So for it to be a valid trend line, it should have at least two touches. So the first touch is here, the other touch is here, okay? And in this case, a trend line is, this trend line is acting as a resistance zone, because you realize every time price came to this zone, it bounced off. Price came to this zone, it bounced off. price came to this zone, it still bounced off. So one, it's acting as a resistance zone. Two, you realize all these pullbacks have been happening at the trend line. Okay, so meaning that the trend line is also helping us realize where the pullback is ending. And remember, we said if it's a bearish trend, you're looking for sell opportunities, and we are selling at the pullbacks. So when price is pulling back, you don't exactly know where the pullback is going to end, or where the pullback is going to, where the pullback basically is going to end for you to look for a sell signal. So when you see price bouncing off a trend line, this is also indicating to you that the pullback has ended here, and you should now look out for sell opportunities. So for it to be a valid trend line, remember, it has to at least have two touches. So let's imagine from here, from this vertical line, that all this had not yet happened. And you had seen this zone and this point and this point also, and then gotten your trend line and drawn it. So if price was here at the lower low and price was retracing, you would be interested to see how price reacts at the trend line. And indeed, when you look at this trend line, let me make it a bit bigger. This is the point I'm talking about. And in this case, when you look at this trend line, you're going to realize that there's a bearish engulfing candle right here. It's a spinning top right here. And these are reversal signals, reversal candlestick patterns, indicating that the bears are now gaining strength in the market and they're ready to push the market lower. Okay, so when it's a bearish trend, you want to look for sell opportunities at the pullbacks. And in this case, the trend line is actually indicating to us that the pullback ended here, and now you can look for reversal signals to continue to the lower side.
Maria?
Yes, please.
Just to add on that, it might look confusing right now for someone who's not experienced. There's a lot of information around the trend line there. But if they went a time frame higher, you'll probably see one candlestick rejecting that same trend line. Maybe you can look at the weekly and we see what printed around that area. Thank you.
Okay. So this is the area right here. And there was this can be a morning star, or it can be a doji with a confirmation, a bearish candle, indicating that price is going to continue to the lower side.
So guys, from that example, whenever you're looking at a time frame and you fail to understand or to pull out the information from the market, always go a time frame higher to get a much clearer view of the market. Whenever you get confused with candlestick formation in a particular time frame, always go a time frame higher. It will always be clear. Thank you.
Thank you, Eric. So I think it's clear up to this point. So this was a trend line, and in this case, it's acting as a resistance zone, and it's actually also helping us indicate where the pullback has ended. So let's look at the bullish trend and how to look for buy signals there. What were we looking at? USD JPY. Okay. So after you have classified, this is USD JPY, the 1 hour time frame. After you have seen that the trend is an uptrend, so you want to look out to start marking your zones. And you can mark using either horizontal lines, support and resistance, or using diagonal lines. So when I look here, if I pick my trend line, you can try to pick it and see. And if you see that the trend line is not really joining any 2 points, like now, for example, this is the first low, this is the second low, but you clearly see it is not aligning properly, then you get rid of it. You don't have to force it. If a trend line is to really align properly, you will see it make several touches. But if it's not, then you can't force it. And so now let's talk about resistance and support here. When market is moving and it's creating higher highs and higher lows, what is a support at one point will turn into resistance. And if it's in an uptrend, what is a resistance at one point can also turn into support. For example, when market came here, it didn't break this zone, but it bounced off and came back here and created a low. So if I pick my rectangle here and mark this, I would wait to see if price broke this resistance zone. It didn't reject it, but it still retested this zone around this area. Okay, and then we see this higher high still. Price came, it didn't go beyond here. So if I'm to make this as a resistance zone, I would still be interested that after price broke it, did it retest it? So when price retests your resistance zone and still rejects it, what was a resistance zone at this point now becomes a support zone at this point. So now here it would indicate that the pullback is actually ending at this point, and then I should be looking for buy signals around there. If I go to the 4-hour and I make this a bit bigger, this is the zone right here. You can clearly see a strong bullish candle engulfing the previous candle. You can still see there's a doji here and a bullish candle. There's a piercing pattern right here. So all these, remember your Japanese candlestick knowledge, all these are bullish reversal signals. And we still buy at the pullback. So there are many ways to indicate to you that the pullback has now ended. In this case, a previous resistance zone turned into a support zone where price broke through and then retested it. So when it retested it, it rejected it, continuing to the upside. The same thing happened here. Price broke this resistance zone and still retested it. And then we can clearly see that price still rejected it. And what was resistance here turned into support here. I hope that makes sense. Is any questions?
Richard, you're the one asking about support and resistance. Any question?
No, thank you.
Okay. And so after looking at the uptrend and the bearish trend, let's go back and see how we can integrate this structure, this market structure. And in this case, how we can integrate our downtrend or bearish trend with support and resistance and with the candlestick patterns. So why do we say you have to integrate them? When you integrate them or when you add them up all together, when you combine them, it helps you make a better trading decision. It helps you with the confirmations. And remember, before you enter a trade, you need to have several confirmations, at least 3 confirmations. And so in this case, you're looking at a bearish trend. That is one thing. And you have realized that you're seeing lower highs and lower lows. 2, you have been able to mark a resistance zone right here. 3, when price gets to our resistance zone or at the end of a pullback, you don't blindly get into a sell. You look for reversal Japanese, bearish reversal candlestick patterns. And I think all of us can remember the bearish reversal patterns. We have like the bearish engulfing candle, we have spinning tops, we have tweezer tops, we have the morning star, we have the dark cloud cover, a doji plus a bearish confirmation candle. So all those are bearish reversal signals. So every time price pulls back, and you now realize that price has been pulling back to our resistance zone, which is a trend line in this case, what you need to now look out for, how you marry these 3 is looking out for a bearish reversal candlestick pattern, like the ones I have mentioned. So every time price pulls back, that is what you're looking out for, a bearish reversal candlestick pattern. So you do realize that at this point, we could see a doji plus a bearish candle indicating that price is continuing down. Let me make this a bit bigger. And they realize at this point, there's a spinning top here, there's a bearish engulfing candle. At this point, there's really a strong bearish candle. This is engulfing the previous candle. At this point, we are seeing a dark cloud cover. So all these are bearish reversal candlestick patterns. So every time price pulls back, at the end of the retracement, you're going to be looking out for the reversal candlestick patterns. And it's the same thing for an uptrend. Every time price pulls back, and you have indicated that my pullback is ending here. And the way you indicate that can be a previous resistance turned into support or a trend line drawn there. And so every time you have noted that maybe the pullback is ending here, then you look out for the reversal candlestick patterns. I hope that is clear as well. Eric, the co-host, please allow me to take a minute, as if anybody has any question, they can type or unmute themselves and ask. Let me take a minute.
Okay, okay, thank you. So guys, any questions can come in right now. As you can see, Euro USD is selling, as we looked at it yesterday. I believe it's a very, very good day for traders who are actively trading. Euro USD, GBP USD, OD CHF, they all took the direction we predicted yesterday. GBP USD making roughly 150 pips, USD CHF making 100 plus, around 120. Guys, it's been a good day. It's been a good day. So you can all see patience is very important. The whole of last week we were waiting for these things to short, and they kept on going up, but we maintained our bias. And today, from yesterday, I mean, they're now melting. They're now melting to the direction we predicted. Dr. Mungoma, did you make money in USD card? I have not looked at it, but I think it also went up.
Yesterday I was traveling. I have not even been able, I wasn't able to get in the trade.
Wow, 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 wow.
I missed that. I was so, had so many, I had to move to another city. And actually right now I'm not even in Los Angeles.
Oh, okay.
I'm somewhere else, but I saw it late this morning.
Yeah, I'm just counting. It's made 150 pips.
Yeah.
From it's actually more than that, but if I was in that trade, I would have taken 150 pips.
Right.
So
yeah,
guys, let's take advantage of these Zooms. I'm seeing in our group we are 70 people, but here we are only barely 20 people. These Zooms will help sharpen your skills, and for those that are professionals, they could also share with us their knowledge, and we all learn together. So let's take advantage of these lessons and we join in. The market has been really, really, really good today. As we were starting this lesson, I had something came up into my mind, and I was like, whatever we're doing here, guys, this only accounts, some people will say 10%, others will say 30%. But this, whatever we're doing here, I will take on a larger scale, will only account to less than 30% of what you're trading, or of what you need to know in trading. Once you know all these strategies, you will understand the importance of sitting with somebody who has experience in this market, and you just pick their brains of how they look at the market. I don't know if Patrick is in the group today. Even Doctor, the questions you ask, sometimes they're not about strategies, but about mindset and psychology. How do you look at the market? So as we continue to learn this, just know that this is the easy part. The hard part is how you organize your mindset for yourself to actually trade profitably. Somebody is saying we look at USD card. We will look into, if we have time, if time allows us, after Maria finishes with her lesson, we will look at it. But we called for a buy yesterday, and I'm happy to say whoever took that call made money today.
Thank you, Eric. I see some Shaifal is asking for USD card. However, this is a day for tackling market structure. It's not for analysis, my dear. Analysis was yesterday and maybe Sunday. So it's important that we take note of the calendar, please, so that we can use our time to the maximum. And so I just wanted to reiterate what Eric was saying. Many times we actually sabotage ourselves in the market. You draw your zones on even the higher time frames, but you don't want to wait for price to reach the zones you have placed on your chart or that you have marked on your chart for you to make a trade. Because you know it's a downtrend, once price gets here, you want to short this market immediately, or you want to sell immediately. But the trick is in the patience, you staying out until you see exactly what you were looking for in the first place. So in this case, we were looking for a rejection at this zone here. And we had to wait for a rejection candle to print, a reversal candle to print. So if you had gotten in here, you realize that now you would be either, if price pushed higher here, you would either be in drawdown, or if you had a small account, probably you would have blown that account. So patience is key. Also, whenever you're getting into a trade, guys, there is what we call a position size calculator, especially if you have a good amount as your trading capital. Please make use of the position size calculators so that you're able to professionally, trade. The position size calculator helps you calculate the lot size that you're going to place if you're entering a trade, so that you don't just enter as a gambler. You want to know exactly where you're going to. Somebody's drawing lines on the chart. You want to know exactly where you're going to place your stop loss, the number of pips where your stop loss is, so that you're able to calculate the lot size. Still, if you don't understand exactly what I'm saying, please get on the other side. The accelerated course, we take you through all this, the trade management, the risk management, and the psychology bit of things.
Maria, in addition to that, I think Mr. Timothy has a paid app for MT4, MT5 that will help people with their risk management. Basically, how this app works is before you enter your trade, your stop loss and take profit is predefined. Hence, it helps you to edit your lot size. So, Mr. Timothy, I don't know how much that app goes for. Maybe you will let us know when you're ready. Thank you.
Okay. Okay, so let's continue. And the other thing we didn't talk about is channels. As you're drawing your support and resistance, there is what we call channels. I'm not able to delete these lines, but someone is drawing something. Eric, I think it's you, because you're the co-host. Help me delete those lines.
They're not coming from me.
Okay. Wow. Anyhow. Hello, Timothy.
Yes, Maria.
Eric was talking about the paid app that calculates the position sizes that you have.
Yes, there is an app that you can use to simplify your risk management. I'm not so sure which day we're going to cover it, but on the day of risk management, I will introduce it and show members here how to use it and how beneficial it is. Let's just look out for that. I don't remember what day on the power program that's going to be, but it's part of the things that we're going to cover during this month of learning. Sorry, I joined in the Zoom late. I had some other commitments, so I found that discussion halfway. So I don't know the background of how that came up, but the app is there, and I will be showing members how to use it, how to acquire it. And it does very, very much simplify trading, especially the risk management. Basically, how it works, you predefine your risk, so that at the point of entering the trade, it automatically puts for you the lot size that is equivalent to your risk based on where your stop loss is going to be placed. So it does all that calculation for you in the background and then places the trade for you and places the stop loss and the take profit.
Okay. Thank you, Tim. So guys, look out for that lesson on the calendar. So moving on, there is also a structure we call a channel, and the channel is simply market ranging or consolidating, but diagonally. In this case, a channel is basically made of two parallel trend lines, meaning one trend line will be up on the upper side. And in that case, if it's on the upper side, it will be referred to as resistance, or the channel resistance. And so the other trend line will be on the lower side, meaning it will be channel support. So every time you realize that markets is just bouncing in a diagonal zone, in this case, comes up, comes down, comes up, comes down, you can draw your channel there. in this case, and how you draw a channel is just double click the upper trend line. In this case, we had already drawn this trend line, the first trend line. So you double click on it, and so these small squares will come on it, and then you press your Control key down, and then left click on it, and then drag it. So for it to be a viable channel, the other line that you have dragged from the first one should clearly be touching these lower lows, just like you see in this case. And so now you realize that your USD has actually been moving in a channel. It's been bouncing back and forth, back and forth. So it's been bouncing between a high price or between the channel resistance and the channel support. The channel resistance and the channel support, the channel resistance. And so this gives you an idea of where price might go to next until it breaks out of this channel. For now, we still see it still ranging within this channel. So the channel will actually help you gauge where price is moving to next. So for example, now you would know that price has been here, 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 here. It has created like 2 touches on either side of the channel. So once price is here, you would now anticipate that probably if I see reversal signals on the channel resistance, price will push to the channel support. And so you would place your take profit at the channel support and place your stop loss above the channel resistance. So that's how a channel is. And probably something else I did, I forgot to explain while I was explaining when you're entering trades. So like I said, you enter trades at the pullback. In this case, you know, price is creating lower highs and lower lows. You enter trades at the pullback. Say, at this point, if I see that there is a doji and a bearish candle, indicating that price is going to push lower, indicating that price is going to push lower, you would now enter your trade here. After this bearish confirmation, let me use a horizontal line. You place your trade here. Oh, horizontal line, yeah. You place your trade, your entry point here after this doji and the bearish confirmation, and then your stop loss has to be above the candle that has guided you into this trade. So if it's the doji and the bearish candle, so your stop loss will have to be above that candle, and your entry will be here. Of course, incorporating the position size calculator to know which lot size you're going to use. And so since we have realized that price is moving in the channel, you would now place your take profit at the channel support. Okay, Millie is asking to repeat how to draw the channel. Okay, so let me just remove this. Let me just delete this. Okay, so initially we realized that price is moving downwards. It's a bearish trend. Price is creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and so on and so forth. And so we realize that if I pick my trend line, I realize that actually my trend line is really a viable one because it is really touching our lower highs. So you can clearly see that our trend line is touching the lower highs. So remember, in the beginning, these things might be a bit tricky to your eyes. But as you spend time on your charts, trying to analyze these charts, such patterns start becoming familiar to your eyes. So you will realize that also when you look at the lower side, there is a zone that price is not really breaking below. And so in this case, you would realize that price comes down, pulls back, continues down, pulls back. So realize there's also a zone here. And so you can pull up this trend line to this other side. Remember, a channel is made up of two parallel trend lines. So when you're drawing a channel, you just double click on this trend line and these small squares will come on. Press your control key on your keyboard and then what can I say, long click on the channel without letting go. And then you can drag as you're still left clicking. You drag it. And so when I place it here, it's viable because it's actually touching all these lower lows. So you realize that for all this while, if I remove all this while, Euro USD has actually been consolidating within this downward channel. I call it a downward channel because it's a downward trend. It's a bearish trend. So if it's a bearish trend, this is a downward channel. If it's a bullish trend, it will be a bullish channel. So the upper trend line will be the channel resistance and the lower trend line will be the channel support. So you realize that all this time, since about February, price has been in this channel, in this downward channel. So it's going to the channel resistance and coming to the channel support, going to the channel resistance and coming to the channel support. So in this case, until price actually breaks out of this channel, it is still in this channel until we see it breaking out either to the lower side or to the upper side. But we can clearly see that it's been moving in this downward channel. Millie, is that clear? Okay, great. You're welcome. Any other questions? Guys, please feel free to ask because the other time it's going to be a different topic. So if you haven't understood any bit of market structure, please feel free to ask. And so every time you do your analysis and you're done with your analysis and you want to take a trade, always bear in mind that you always have to look out for the candlestick patterns. Can either be the single or the double or the triple candlestick patterns, because these are the ones that actually guide you into taking a trade. They guide you into placing your stop loss. You know, if you just look at this, this is a dark cloud cover right here, and the second candle of the dark cloud cover is what guided me to enter this sell, because this is the daily chart. And so I placed my stop loss right above this candlestick pattern. And I placed my take profit at the previous lower low. And so these candlestick patterns are very important because when you combine them with the market structure and your support and resistance, they enable you get a trading opportunity. So that is my presentation for today. Again, if you're new here and all these things sound like French to you, consider the accelerated course where we go into even a deeper detail than this, where you will actually, for some of the content, you can get a one-on-one where you can understand on a deeper level. Thank you, Eric. I think this is where I'll stop. I'll now welcome any other questions. this is where I stop my presentation. Thank you guys for listening and for being a good class. Thank you.
Thank you, Maria. Thank you very much for the lesson. We are going to take questions in the next 5 minutes, and then maybe if Timothy has something to say, he can say, and then we close this chapter. For those that are trading, tomorrow at 3:30, be aware of NFP. NFP is one of the biggest news in the fundamental arena. So don't be caught unaware. Don't be caught unaware tomorrow and you say, oh, I didn't know why I made money or why I lost money. There's NFP tomorrow at 3:30. So as you trade tomorrow, plan for NFP. Thank you. Moses, thank you for the feedback. It means a lot for us. It means a lot when we see students appreciating the content. Isaac Martins, I know this is your first day. I hope you've been able to grab one or two things. We shall be waiting for you. Shall be waiting for you the other side as we spoke before. Labeja, I don't know if Labeja is new today. I've not seen this ID before. Also, Hillary Shots, are they new here? You can unmute yourself and say hello if you're new.
Yes, hello, I'm new here. Nice to meet everyone. Thank you.
You're
Hi,
joining from.
you're welcome.
Was that Labeja or it was
This is Hillary Schultz.
Hillary Shots? Where are you joining us from, Hillary?
I'm joining from Kisoro.
From Kisoro. Do you have trading experience?
Not really. I'm kind of new here, so everything seems to be new, but I will get there.
Okay.
Yeah.
Please, you can get in touch with Maria or Timothy. Maria and Timothy, you can put your numbers on the chat box, so that Mr. Hillary can get in touch with you, and we see how we can help him.
Okay, that's great. Thank you very much.
You're welcome. Labeja, is he new here, or is she or he new here?
Yes, I'm still new.
Okay, is this your first time?
It's my first time to attend the presentation.
Okay, that's great. Are you a new trader or you have some experience in trading?
I still want to build the skill.
You want to build the skill?
Yeah.
Please, we shall continue this conversation with you on the DM. So you can have the numbers on the chat box there, then you can contact any of the admins here, and then we see how to help you. Guys, any question? Thank you very much, Labeja. Any question?
Let me first learn. I'll ask along the way.
Okay, thank you. Martin, you were here yesterday. I know you're trading. Who else? Jaja Salongo, Richard. I hope you guys have made money from our analysis yesterday.
Wow, I entered. There's one running in GU, but it's dropping down.
Okay, that's good. Good to hear people are taking advantage of what we do here to make some money. So guys, here we follow what we do, or we follow what we say. So that is new here, just know you're in the right place. Yes, who is that?
This is Johan.
Yes, Johan.
Yeah, me, I just want to express my appreciation for those market analysis. There's one particular one that you did. Was it last week?
Yes.
About the fundamentals you gave about the GU, and even that you posted in the WhatsApp group that
Yes.
sellers be ready. So I really, I have managed to actually almost triple my account, my small account.
Wow.
So we selling. So I'm grateful. Yeah.
Thank you very much. We are humbled to get the feedback you're giving us. Johan has been able to triple his account from the analysis we do here. So this is very, very good to hear. Thank you. Timothy, maybe you can take up the floor.
Hi, everyone.
Hi, Isaac.
Okay, sorry to get into this. I'm kind of new in everything. I'm new in trading. I'm new in this platform still, especially FX trading. I don't have any more much idea about that. But previously, I'd done something about trading, and things actually gone well. So I'm pleased to go through the lesson. My my question is okay, with this analysis that you're trying to do, the teachings and the teachings that you're going through, does it apply in all platforms of trading or just is in particular?
Isaac Martins, the analysis we do here, what we teach you here, how we teach you how to do the analysis, it cuts across all the markets. You can do this in cryptocurrencies, you can do this in the stock markets, you can do this in penny stocks, you can do this in options. You can basically do, once you learn this analysis or how to do it, you can do it in any market. However, this is a group of FXTM, but that does not mean that this analysis will only work on FXTM broker. No, it cuts across all the Forex brokers because the information or the data is the same. I hope I've answered you.
Yes. You've answered. Thank you.
You're welcome. Thank you, Julius. We've seen your reply. We are humbled. Jaja Salongo, you want to say something?
Jaja Salongo, say something.
So guys, if we have no questions or comments coming through, maybe Mr. Timothy. You can close the group. Millie, thank you very much.
Hi guys.
Hello.
Thank you very much, Mr. Eric. Thank you very much, Maria.
Timothy, there's somebody talking. There's somebody else who's speaking before you wind up.
Yes, Jaja Salong was speaking.
Okay.
Good evening, guys.
Good evening.
Thank you so much. Thank you so much for the training, Maria and Eric.
You're very welcome.
You're welcome.
I will follow. Thank you very much.
You're welcome, sir.
Okay.
Back to you, Timothy.
Thank you very much, Mr. Eric, for hosting this meeting. Thank you very much, Maria, for tutoring us today in market structure. Unfortunately, I didn't manage to attend most of the class, but I know you did a good job because many of the things you've taught today, I'm sure some of the things you taught me in the past. Guys who are on this forum, we thank you for being here. We do not take the time that you put in here for granted. And that's why you see we keep putting in effort. We value your time. However, I just want to reiterate what my co-hosts have been saying. The program that we've designed here cannot cater for everybody. We appreciate that you are at different levels of learning. However, we're doing our best to accommodate everyone here in the free Zooms. That said, we have an accelerated program, which the accelerated program is designed to suit individual needs. If you'd like us to help you individually, please take advantage of it. Currently, the course is going for only $300. Only $300. I cannot promise that this course is always going to be that amount of money because you're tapping into experienced traders at least. They are giving you one-on-one training. If you ask me, you're getting it for free because the $300 doesn't even cover the bills for hosting you for over 3 months to teach you how to trade. Guys, take advantage of this. You're so blessed to have it. Many of us, when we were coming out in trading, we didn't have opportunities like this. The guys who are taking our money were giving us nothing and letting us go to lose money. We're here right now. I cannot guarantee we shall be here for very long. This was a session of giving back and trying to encourage other people to join the trade, to build a community, because we realize that the more we are, the bigger our voice will be. Please take advantage. Guys getting signals, Johan, I'm very happy that you're making money off the signals here. However, I would love very much for you to be able to generate these signals on your own. Because the day Eric is not here to give you signals, I still want you to be able to make money. So if there's anybody, so please keep taking advantage of these classes to learn how the signals are generated. If there's anybody who is still very new, please take advantage of this course. It's an accelerated program. It's tailored for your needs, and it's only $300. And learn how to do this for yourself, because you cannot guarantee, I cannot give you a guarantee that I'll always have Mr. Eric and Maria here to help me, or myself to be here to help you to grow your trading. To be honest, that money for the course is very little. It does not even cover expenses, but it is just as able to put aside time to help you to grow. We're hoping that as we grow this community, we shall have a bigger voice here and basically to have a bigger voice, and we can also influence the brokers to give us better services. And that's why we're growing and encouraging you to all join on the FXTM platform, which is co-sponsoring these Zooms. I don't have much else to say. Still can. And happy trading. Those who are trading and making money, please enjoy that money. Enjoy that money and enjoy your evening. Mr. Eric, I don't have much else to add today. Unless there are questions directly for me, I will hand over back to you. Thank you very much.